Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. You know, I'm a big proponent of simplified trading. The fewer things I need to look at to make a decision, the better off I find that I am. I trade only a handful of signals and formations, which you know, they're all in the Truth About Trading Support and Resistance Manual, as well as the new Simplified Support and Resistance video trading manual. There's nothing earth-shattering about this, but let me show you one of my simplest, favoriteest tools to use, and that's the basic trend line. A trend line is nothing more than a tool to help you get an overall feel for what's happening in the marketplace. And unlike most people, and I go through this in the manual, I like to draw my trend lines backwards. I like to draw it from the most recent activity back to the oldest activity. Now, some things that people do wrong when they draw trend lines is they often get too precise, or they try to be too precise. If I'm confused about drawing a trend line, I tend to err on the side of caution. I tend to look at the longer scope time frame rather than trying to focus in on the shorter scope. Now, there's nothing wrong with doing a shorter time frame trend line. Absolutely nothing wrong with that. However, the tighter you make the trend line, the more likely you are to generate signals. And anything that you use to generate signals is going to increase the probability that some of those signals will not be correct signals, will not be true signals. So, as I said, I tend to err on the side of caution. Let's take a look at an example here. This is the December coffee chart from a couple of weeks ago. And the reason I'm pointing this one out is although I didn't trade this myself, because quite honestly I'm not much of a coffee trader, I did point this one out at the forum, and it seemed to have generated a little bit of interest. And really, it wasn't that difficult of a trade to forecast. This is what we were looking at. And if you take a trend line and you draw it on this chart, and like I said, I like to draw it backwards. So I go from the last peak, the last confirmed peak, which is right here, I draw my trend line backwards like that. Now, in this particular instance, it wouldn't really matter if you drew it from back here forward or if you drew it from forwards back. It's not that much of an issue. But as I mentioned, I try to take the most current activity into account. So if we extend that trend line, lo and behold, you can see that the market is trading right at the trend line price. The next day, we get resistance come in. Remember, resistance is a green-red bar combination. And not only that, it is an inside day formation, a very strong little market formation. Take a look as well. We have 1, 2, 3 hits right on the low, 1, 2, 3 hits right on the high. This market is stuck. Well, knowing that it's stuck between support and resistance, has just formed resistance, and is at the trend line, where do you think it's going to go from here? Well, you don't need to be a rocket scientist to guess that, well, if it breaks support, maybe I'll sell it. So we would take a look at selling right below there. There's our support. So what happens the next day? Boom! Get one of those. Those are beautiful, aren't they? Gotta love it when the market the bottom drops out and you're selling. That's beautiful. Anyways, a lot of people were confused as to how I was able to spot that, and that's how it came about. No real secret there. Let's play this chart forward a little bit. And you can see that the other trend line, the bottom trend line, is looking like this. And you can tell that the market came up short here. Am I adjusting the trend line just yet? Well, I wouldn't argue with you if you wanted to. Look at how nicely the prices fit that particular scenario. We play it forward, and this is where we are now, with the market making another move lower. Well, if it comes down here, which it's very likely to, and shows us support, namely a red-green bar combination, I will definitely be looking to buy, because that is obviously trendline support. Now, I want to point out a couple other things to you before we leave this subject, and that is that trend lines tend to make one of two market formations. They're either going to show you a triangular type formation, as what was happening here in the coffee chart. You can see how it's, I'll back this up a few days. It should be fairly obvious though. Where we have this triangular type formation developing, and if we extended the lines, it would look something like that. That is one formation that tends to develop when you're using trend lines. The other one is a channel type formation. So if we play this to the end, and as I mentioned, with this new trend line developed, we could draw it in like this. We now focus on the highs, right? We broke the top end of this trend line. We broke that one, right? So now, what type of formation are we developing? Well, it's not so much a triangle right now as an upward channel. Can you see that? And notice how these lines are nearly parallel. They don't have to be perfectly parallel. This is trading after all. It's not an exact science. In fact, sometimes I end up drawing my trend lines and we'll have a bar or two or three even sticking through the top or the bottom of the trend line. That doesn't matter. We're just looking for the general feel of what the market is doing. Trust me, there will be times that the market will honor the trend line right to the number, and then there's other times where it's going to slide through a little bit and then finally come back and give you the reaction you're looking for. But what I want to point out to you is, as I said, there's usually one of two formations developing when you're using trend lines. Either a triangle formation, be it a large or a small one, or a channel type formation. So it seems that in the coffee market we have now shifted from the triangle formation to the channel formation. And therefore, we're going to be looking for coffee to give us some sort of support down here. And yes, if we had been a little bit faster on it, we may have found a way to take advantage of this reactionary high and this move lower. But you know what? We're not going to catch all the trades. You never will. So better that we hold on a little bit and we wait for coffee to come down. Right now, eyeballing it, looks like we're going to be, maybe down here around 132.50. And again, a trend line is a tool we use to help us identify where the most important support and resistance is likely to occur. And we have a couple hits back here, a few hits through here. We do have a lot more activity up here, so it may stagger a little bit, tail off sideways, and then finally come down. But anywhere near here, if we get our red-green bar combination showing us support, I'm going to be looking at buying, especially if we have support like we did back here. Let me make this a little larger for you. Where the market closes higher, remember that's a strong signal for us. Or if we get another one of these little inside bar things happening, where the market is showing a reluctance to continue any lower. So that's just a quick little overview of trend lines. Don't discount the effectiveness of a trend line because of the simplicity. try to incorporate it into your trading. I think you'll be really surprised at the results and how it will help clarify what it is the market is likely to do or trying to do. But as I said, try not to get carried away and draw a bunch of trend lines on your chart, because it's just going to look like a mess and it's only going to lead to confusion, and that is the exact opposite of what we're looking for. And that's this week's Tricks of the Trade.